Okay, good. It's recording now. Yeah, I was just going to say, you have to remember that the pivot points come out from midnight, and in fact, that's one of the reasons why we meet early at 6:40. Usually I'm up by 5:30 to assess the market and place my trades because, the market doesn't wait for anyone. It's not like a 9-to-5 job, so to speak, that it will move at a specific time. So the market can move anytime. So the earlier you start, the better. Obviously, for practical purposes, it will be difficult to get everyone to meet at 5:30 in the morning. So that's why we meet at 6:40. But in terms of learning how to trade, the whole aim of the 2-week session is for you to understand the principles of trading, the strategies of trading, and what makes a successful trader. Obviously, when you start trading on your own, you have to decide how early you start trading, how soon you place your trades. Because, like I said, just wanted to highlight that point that the market, doesn't wait for us, doesn't say because we're starting at 6:40, the market will wait till after 6:40 before it moves. It can move way before 6:40. So I just wanted to highlight that point. The market, you can't really put the market in a box. It will do what it wants to do when it wants to do it. But obviously, you still need to go through the same routine in terms of assessing the market before you place your trade. So you don't just rush straight to your charts and place the trade. And the reason why I'm up at 5:30 in the morning is so I can calmly assess the markets before I place my trades. Okay, so we'll go back to looking at the economic calendar, which is what we always start with first. Today is Tuesday, the 3rd of May, and we're looking for reports that could have an impact on the market we're looking at, which is the Euro-US dollar. We had the Australian rate decision at 5:30 this morning, but that wouldn't have much of an impact on the Euro-US dollar. Now at 9, excuse me, at 9 a.m. GMT time, which is 10 a.m. UK time, we have the Eurozone Producer Price Index. That's a report of medium importance. So that could have an effect on the market, but won't stop us from placing our trades. Then at 2 p.m. GMT time, which is 3 p.m. UK time, we have the US factory orders. Again, that's a report of medium importance. So there are no reports of high importance due out today that will affect our markets, but we just have a few reports of medium importance at 10 a.m. and 3 p.m. that could affect the market. So we'll go ahead and place our trades, but we're just going to be aware that, it's, to check your trades and check your charts around 10 and also 3. But we'll be meeting again at 12 to see what the market is doing. So with that in mind, obviously there's no public holiday today. Today is a normal day. So we'll go straight to our analysis. So we've got the extremely bullish Euro-US dollar. This is the 1-year daily chart. So you can see the market is uptrending. It's been uptrending since the 13th of January when it broke the moving average 50, which is the black line. And it's been uptrending since then. You can see it's been trending up comfortably above the moving average 50. It's broken the 23.6% Fibonacci retracement. It's going up. And as usual, it's making higher highs and higher lows. It goes up, pulls back. It's going to pull back here and looks like it's going back up. But again, anything can happen in the market. But from a swing trading point of view, there are no clear opportunities at the moment. You can either buy when the market gets to the 0%, when it breaks the 0% retracement, which is quite far away, or you can sell when it falls back down and breaks the moving average 50, or when it breaks to 23.6% Fibonacci retracement. But obviously, there are no clear swing trading opportunities. And you still have to, the thing with swing trading, although you can get a huge amount of points from swing trading, but you don't get opportunities don't come every day with swing trading. But that's a good thing sometimes because it avoids you over trading. So we'll now come to the day trading. You can see that initially, we discussed this yesterday. Let me just go to 1 week. I'll just discuss this again, because yesterday I was saying that initially the market was trending sideways. On Thursday, Friday, and most part of yesterday, Monday, the market was trending sideways. But like we discussed last night, that once that got broken, once that sideways trend got broken there, then we can then focus on the more recent trend of the market. Because once that's broken, it's no longer trending sideways. So we don't have to look at that too much anymore. We can then focus on the more recent history of the market. Let me just go back down to today's 5 minutes. So you can see the more recent history now. The market has been trending down. So obviously this is not a sideways trend. It's been trending down and it's been going down. So this morning, obviously, with the market trending down, and now it's beginning to go sideways here. But the pivot point and the first support obviously is outside that sideways trend. Again, you can see the moving average 52 trending down nicely. So it's been trending down. And then obviously here it started to go sideways there. And we can see that the pivot point and the first support are outside the sideways trend. So with that in mind, we can now place a buy order just to buy just above the pivot point at 14,831, and an order to sell just below the first support at 14,755. So those were the pending orders we placed this morning. Obviously, the market took the order at 6:40 on the dot. Now that the market has taken that order, just connect that. We'll wait and see. I mean, the market will either come back down, take us out, and we'll lose 20 points, or if it goes up to halfway towards our target, which would be 14,861. Our profit target is 60 points. Our profit target is 60 points. So once the market moves 30 points halfway towards our target, so once it gets to about 14,861, then we'll move the stop, edit the stop, and move it to the open level. But between here and here, we're happy to lose 20 points, because that's to just give the market room to move. So at this point, if the market comes down and takes us out and we lose 20 points, that's fine. We're happy to risk it. And that's where your money management comes in, because if you're not happy to lose those 20 points, then don't place the trade. Because again, anytime you place a trade, there's a 60% chance you're going to lose out on that trade. So with that in mind, you always have to make sure you apply good money management. there's no guarantee that any trade you place is going to be a successful trade. All you can just do is make an objective and logical decision, place your trades, use your strategy, and go for it. But because you know that despite your best analysis, there's also a 60% chance of losing money, you always make sure you're risking, you're comfortable with the amount of money you're risking. And that's why for beginners, I always say start with, 50p per point. In fact, when you open an account with IG Index and you have a new account with them, you can risk as low as 10p per point. So you always make sure you're risking what you are comfortable with, because there's always a chance, a 60% chance, which is a high probability that trade can end up being a losing trade. So I always tell people, focus on what you can potentially lose. Don't focus on what you can make. You have no control of the market. You don't know which trades are going to be successful. You don't know which trades are going to be unsuccessful. But what you have control of is how much money you can lose. So if you place a trade, you have to be comfortable that, yes, I'm happy to lose this 20 points. If you're not, then don't place that trade. Or if you feel that, you're risking 50p per point and you feel, okay, I don't want to risk £10 on the trade, then you drop your contract size down to 10p per point. So again, always remember that, because that's what takes the stress out of trading. Once you're risking the amount of money you're comfortable with, then you don't start panicking with your trade and hampering your trade. Because once you're risking amount of money you're comfortable with, then you're happy to wait and see. Because you have to wait for the market to at least move a bit, move halfway towards your target before you start moving into your opening level. And you'll be able to do that comfortably if you're risking an amount of money you are comfortable with losing. So that's always the key. Any questions? If you have any questions, you can either click the hand button or send your question through the question box. While we're waiting for questions, I'm just going to answer one question someone asked about the accounts. If you want to open a trading account, you can either open a spread bet account or a CFD or Forex account. Now, this always tends to be an issue with some people because of the name spread betting. I always say the name spread betting is just a term used for tax purposes. It doesn't mean you're betting, but it's a term some people are not comfortable with. Let me show you. So you can see here with IG Index, you can either have the spread betting, you can open a spread bet account. But the thing about the spread bet account is that you don't pay tax on your profits, and it's just a term that is put on the account, but you don't pay any tax. Whereas if you open a CFD account, which you can do with the IG Markets, so you can go to igmarkets.co.uk and you can open a CFD account where it's not a spread bet account, it's a CFD account, but you pay tax on your profit. But you find that, let me just log into my account. I'll log in there. But you find that the platform itself is exactly the same. The platform, the instruments, the charts, everything is exactly the same. The only difference is that one you pay tax, one you don't. And, I'd rather use the spread bet and not pay tax. So that's the spread bet which I use. So I'd rather use my profits to help out the orphans and widows in Rwanda instead of, obviously it's a government law, so you're not breaking the law. It's what they provide there. So yes, that's the only difference really. So you can see the platform. This is the IG. This is the CFD account. So you can see it looks exactly the same as the spread bet account. This is the spread bet account. So you can see this is the spread bet account. So this is spread betting, where you don't pay tax on this. And this is the CFD, you pay tax on it. And obviously the quotes are the same, they're exactly the same. The only difference is the way the quotes are shown. Whereas with the CFD account, for instance here you can see the euro US dollar, the sell price is 1.48334. So they put a decimal there with the CFD account, so it's 1.4833. You use the last four figures, so this 4834 is the figure you look at, so 1.4834. So it's the last four you look at, whereas with the spread bet, the decimal is not there. So you see with euro US dollar is 14834. So the decimal is just not there. But you can see the quotes are exactly the same. And obviously if I bring up the charts too on the spread bet, you see that the charts are exactly the same. The pivot point levels are exactly the same. So for all intents and purposes, they're all exactly the same. There's no difference in the platform and the quotes. The quotes are exactly the same. The strategies are exactly the same. So the only difference is just the term that they put on the account. If they put spread bet on it, you don't pay tax. If they put CFD on the account, you pay tax. So that's why I always tell people that if they've got an issue with the word spread bet, then they can open a CFD account and pay tax on their profit. The other thing you have to be careful about, another reason why I prefer the spread bet account is quite straightforward, because you need to start working out these decimal places if you open a CFD account. So you have to be careful. If you work out the decimal in the wrong place, you can get into trouble. Also with the CFD, they have what we call mini forex and standard forex. Mini forex means that one contract is equivalent to 10 contracts. And then with the standard account, one contract is equivalent to 100 contracts. So, there are a lot of little things you just need to be aware to using the CFD account. But of course, the good thing about IG Index anyway, or any trading platform, is that they will give you lots of free information on how to use the platform anyway. So if you see here, new to CFD trading, they can explain it to you. They're free online seminars. So there are lots of free information on how to trade on CFDs. So what is CFD, how to trade CFDs, they have the free seminars on there. Same with the spread bet too. There's a spread betting video, how to use the platform, and mobile dealing. So there are lots of free seminars online which you can take advantage of, either for the spread bet or the CFD. There are free seminars on there. So again, like I said, it's just a matter of choice. I always tell people that term spread bet is just a term. It doesn't mean you're betting. It's just that with the term spread bet, it just means that your profits are tax-free. But when it comes to strategies, the platform, the charts, the quotes, they're all exactly the same. The only difference is one, you pay tax on the CFD. Spread bet, you don't pay tax. So that's why I always advise people to open a spread bet account with IG Index. And also it's straightforward in terms of you don't have to start working out decimal places and all that. See, there's some questions here. Are doing advanced techniques this week. What time does the market for U.S. crude oil open? The market for crude oil usually opens around midday, but I'll have to check that one, because I don't trade crude oil regularly, and usually when I trade it, I swing trade it where I just look for opportunities at the end of the day. But I have to check on that. There's a question here about doing advanced techniques with trading. Yeah, we can talk about advanced techniques, but I always say that with trading per se, there is not really, one has to be careful saying advanced. I try very hard not to use the word, although sometimes I do classify the classes as beginners, intermediate, and advanced. But usually an advanced trader is someone who does the simple things very well. I think it's always good to remember that. You know, an advanced trader is someone that keeps it simple and has a strategy they use well, and they stick to it. You know, I always give the story of a chap. I went to a seminar in New York. He makes millions, and the only indicator he uses is the moving average. He does not use any other indicators apart from the moving average, and he just swing trades using moving average. So he just places a swing trade, he loads all his contracts on that, and uses only the moving average with good money management, and he makes millions of that. So he doesn't change, and that's the way he's been trading for the last 20 years. I also know a day trader who is a very successful trader, and he only uses pivot points, nothing else, and he only trades one market, the Wall Street. So again, one has to be careful, because sometimes you can complicate your trading and have too many indicators you're using. So there are other strategies you can use. I think we spoke about one last week where you use the support and resistance of the market. And if we have another chance and that comes up over the week, we'll look at it again. So support and resistance is another strategy I use. And then obviously there's the swing trading we've spoken about already last week, where we talked about the Fibonacci retracement, using the Fibonacci retracement for swing trading. But yeah, I think, it's making sure you do the simple things well. Not complicate your trading too much. But the main strategies I use are the pivot points. Yes, I guess sometimes you can use a moving average 50 to trade. But again, you have to know when to use it, because you can see potentially could have used it there, because you can see here when the market was downtrending, you can see the moving average was downtrending nicely, the moving average 50. So when it broke it there, you could have bought. So that's one possible technique you could have used. But again, you have to know when to use it. For instance, here, you wouldn't have used it here, because you can see the market had been crisscrossing the moving average 50 for a long while. So you would not have used it there, although it could have ended up being a profitable trade. But I wouldn't have sold there, because the market had been crisscrossing it. But I could have bought there. But again, I think the key is to be careful, not because if you find a strategy that works well for you and it's something you're very comfortable with and you're profitable, I think it's best to stick with that strategy, because sometimes the more you add to it, the more complicated you make it, the more trouble you can get into. So I think advanced trading, I would define advanced trading as, making sure you have a good trading plan. You got your trading psychology down to a T. You're disciplined, you're focused, you apply good money management, you've got a good strategy, and you have a successful plan, and you're consistent with it. And you take in all the factors we've been talking about in terms of the economic calendar, the public holiday. You observe the nuances of the market, knowing that the market tends to trend sideways prior to report of high importance, during public holidays. The other one I'll mention, which we haven't had a chance to witness yet, is that you find that also after a huge move in the market tends to trend sideways the following day. So if, say, for instance, today the market goes up by 200 points or it goes down by 200 points, more often than not, the following day the market tends to go sideways. So I think it's making sure that you have all these things down to a T, that they become second nature to you, and that's actually that's what makes you an advanced trader. It's doing the simple things very, very, very well and being consistent with it. But as opportunities come up to show you different techniques to trade, we'll do that. Although when I said different techniques, I don't use many. The main ones I use are the pivot points, the moving average 50, and the support and resistance levels in the market, which I think we've touched on them, especially the support and resistance. We did that last week. Again, this is where I'll repeat that, if you go to stock trading seminars, if you watch seminars, if you speak to traders, like I said, if you speak to 1 million traders, you'll get 1 million different trading plans and 1 million different strategies. And also, if I just bring up the indicators here on the chart, you can see that there's so many indicators you can use. But again, I always repeat, doesn't mean you have to use them. Otherwise, you might just confuse your trading. Because, you can use Bollinger Price if you want. Let's add some more indicators. You can use, Community Channel Index if you want. You can see there's so many of them. Some of them I haven't got a clue what they do. You can use Ishimoku price. God knows what that is. I'll talk about MACD tomorrow. I use it less and less now, but I'll talk about MACD tomorrow morning. You can use, what else? What other indicator? Money flow index. Don't know what that is. Put it there. There's no volume on this security. Let's take that out. What else can we use? The vast majority of these indicators, I don't know what they do, what they are. Relative strength index, that's a commonly used one. What else is there? But you can see there are just so many of them. There's so many of them. So you can see now, this is our indicators. Now you can imagine if I've actually seen some seminars which I find shocking. I've watched some seminars online and been to some seminars on trading, and you will see the guy talking about trading, and he's trying to explain a chart like this to people. Obviously, it makes you sound very smart. It makes you sound like you're a professor with trading, because, by the time you're trying to explain this to a room full of people, obviously they will go home confused, but they might get the impression that you are a wonderful trader because you understand all this. But how you can make a decision with all these indicators in your chart and with all these signals you're getting is beyond me. And I do see some traders trying to explain this away, and I think sometimes they're just trying to show off, because, and I always tell people, why do you want to trade? Because sometimes some people do get into trading just to show off, and, they can show their friends this chart. Their friend looks at the chart, they think, oh my gosh, it looks, quite complex, and it makes you look as if, yes, you're doing something extremely complex, extremely difficult, and you need to be super smart to understand it. But again, that's not the aim of trading. I mean, if you read the book Market Wizards, or you speak to very successful traders, most successful traders just have a simple technique and they're successful. And they just keep quiet about it and go about their business. But, you find smart Alex that want to show you they use 20 indicators in a chart. In fact, it's recommended you only use 2, maximum 3 indicators on your chart. Because the whole aim of trading is for you to look at the chart and make a quick decision. But you can imagine having all this on your chart. How are you going to make a quick decision? You're trying to see what is the CCI doing, what's the MACD saying, what's the relative index saying, what does the Bollinger Band say? With all that, you're just going to have a hard time making a decision. And that's the whole aim of trading, is you want to make quick decisions because the market moves the market is quite dynamic. It's constantly moving. So you want to be able to look at the chart and decide, this is what I'm going to do, and do it. So again, for me, for instance, now for the day trading, you say to yourself, market is downtrending, and you see this morning it's going sideways between the pivot point and the first support. Those are indicators I use. If the market breaks the pivot point, I buy. If it breaks the support, I sell. And that's it. Decision made. Place my trade. 20-point stop, 60-point profit limit. That's it. And that's your decision made. You don't have to overanalyze the market. Or like I said, if I was using the moving average 50, because the market has been downtrending nicely, so I know if the market breaks the moving average 50, because you can see it hasn't broken it for a while, it's a nice smooth downtrend. If it breaks it, I'll buy. So you could have just bought there 2 points above the moving average 50, buy. So once you have a strategy, you keep it simple, you're able to make a quick decision. But you can see what the chart was like previously. It's very hard to make a decision with all those indicators superimposed on your chart. So again, trading is all about keeping it simple, because it's all about decision making. Where do I get into the market? Where do I get out of the market? So you want to look at the chart and make a decision. And always remember, again, this is another place to remind you that no strategy and no method is going to give you 100% success rate. Again, I think that's why sometimes you find some traders having so many indicators on their chart. It's because they're trying to perfect their trade. You can have 1 million indicators on your chart. You can make it as complex as you want to make it. It does not mean you're going to get 100% success rate. Regardless of what you do, regardless of how complex you make it, regardless of how heavily technical you make it, regardless of using all the machines and all the softwares in the world to try and predict a trade, you are not going to get 100% success rate. So regardless of what you do, you are going to have losing trades. So remember, if you have a 40% success rate, that's a good plan and that's a good strategy. So it's not every day you place a trade you're going to make money. So again, it's something I too am aware about. So and I think that's where you then realize, like I said before, you only risk what you can afford to lose, because you're not going to get it right 100% of the time. And I think that's what frustrates some traders, and that's why I never tire of repeating it over and over again, because some traders, they get frustrated and angry when they lose out on a trade and they lose money. And you have to accept quickly that that is part of trading. If you don't accept the fact that you're going to have some losses, you're going to find trading very, very frustrating, and you're going to keep changing your plan. You're going to keep changing your strategy. You're going to keep looking for one that's going to give you a perfect success rate, and that does not exist. So that's why I never tire of repeating it over and over and over again, because you need to come to that realization quickly and accept that fact quickly. Otherwise, you will find trading frustrating, or you might, get scared of placing trades. Because if you accept the fact that, look, anytime I place a trade, regardless of my analysis, I'm going to have, there's a 60% chance I'm going to lose money. So again, but because I'm aware of that, I will trade I'll trade small contract sizes appropriate to my account. Again, stop loss in place to limit my losses, because I know that, despite the fact the market is going up, it's broken the pivot point, it could just turn around and fall back down, which is fine. If it does, I'll limit my loss to 20 points, and my contract size is appropriate, so I'm happy to lose that amount of money. And that's the way you have to look at trading. So if you start looking for the holy grail, for a perfect system, it does not exist. It does not exist. So the system that's good is the one that gives you a 40% success rate. So always remember that. If it gives you a 40 to 50% success rate, that's good. It's not going to give you, you're not looking for one that's going to give you a 60% success rate. That doesn't exist. At best, on the average to be a 40% success rate, at best 50%, but no more than that. But even if you have a, really perfect plan of 50%, that still means you have a 50-50 chance of losing money. And again, I always repeat, even the most successful traders in the world, only have a 40 to 50% success rate. And the reason why they're very successful and very rich is because they respect that fact, and they keep their trades simple, they plan their trades, they apply good money management, and they don't overtrade. But once you don't accept that fact, you would overtrade, you will be jumping from plan to plan, you will be getting your trading in a mess, you'll be losing money, you get frustrated, and you then probably quit trading. Because, trading can really make you go up and down in terms of emotions. Because 1 minute you're making money, you're happy, next minute you're losing money, you're getting frustrated, you're getting angry, and then when you get angry and frustrated because you lost money, you start to make rash decisions with the market, you start to change your plan, you start to make emotional decisions. And all these sort of things can count to making you either a successful trader or an unsuccessful trader. Okay. Any other questions or comments? Now looking ahead, as we can see, the market has broken the pivot point. It's gone up. It's coming back down, but we'll see what happens. It hasn't taken us out yet. But just in case it does, if the market falls back down and we lose to 20 points, you now have to then decide what to do with our next trade. Now, what I will suggest is that if the market, obviously because you can see here it was downtrending nicely, and again, if it's going to keep going up, we would expect it to keep going up and not break the moving average 50. So if it comes back down, if it takes the stop loss at 20 points, but does not break through the moving average 50, and it starts to go back up, I'll be happy to buy again at the pivot point. I'll just say that again, because as you can see here, if the market is going to keep going down, it will stay below the moving average 50, as it did here. So you can see it just stayed below the moving average 50. Once it broke it and went above the moving average 50, started going above and started going up. So it's the same again. If this market is going to keep going up, it should stay above the moving average 50. So even if it comes back down, takes us out, and we lose 20 points, so long as it doesn't break the moving average 50, I'll be happy to buy again at the pivot point. Obviously, if it breaks it and it starts to go down, then I will be, if it breaks the moving average 50 and starts to go down, then it starts to come back up, I might be reluctant then to buy at the pivot point because you might think it's beginning to go sideways. But if it doesn't break the moving average 50, I'll be happy to buy again at the pivot point. That's provided it breaks, it takes us out. Obviously, we're not out of the trade yet. I'm just thinking ahead. Oh, going back to the CFD and spread bet account, any more questions on that? Are you happy with the difference between the CFD account and the spread bet account? Hello, Adi.
Yeah, thank you.
You're happy with that?
Yes, thanks.
Okay. So you're going to open which one?
Spread betting.
Okay. All right then. Yeah, no need to pay tax.
Okay then. Thank you.
All right. Any other questions before we call it today? Like I said, we're going to meet again at 12, and I'll try and update the blog and the YouTube channel along the way. If there are any changes to our plan, obviously if there's no change to the plan, obviously I'm going to update the blog now with what we've said this morning and the YouTube channel with what we've done this morning. And then if there are any changes to what we've said today, I will update the blog before 12. Obviously, if there are no changes, then the blog will only have what we've just done this morning. Okay. Good. So if there are no more questions, I'll just unmute you all.